rising from the east, lightning on the righteous way, keep us so far from the beast. Hey, it shall be lightning and thunder to overcome the evil's plan. 144,000 souls shall stand with the Father and the Son. Jah is the ruler of creation, say, who Jah bless, no man curse. Jah is the leader of one nation, say, sing the offers never been told. Jah is the ruler of creation, say, who Jah bless, no man curse. Jah is the leader of one nation, say, sing the offers never been told.
True.
That's what I'm thinking. So it's either what they should do.
Check. Okay. I'm checking everybody's mic now. Hello, presenters.
Check.
Like everyone.
Cambia.
Good morning, everyone. So good morning, ladies and gentlemen, all of you here at the Pegasus and our guests online. Thank you for joining and participating in this, our second in a series of interactive webinars wherein we provide information vital to the development of our Jamaican businesses and, by extension, our economy. Our first webinar was convened in July 2022 and is centered around understanding intellectual property and its benefits. Today, we are taking it up a notch as we and our partners provide information to our micro, small, and medium-sized business practitioners. And so we are extremely honored to be joined by 7 of our, and indeed Jamaica's foremost financial institutions. In order, we have JMMB, Sagicor Bank, Scotiabank, Wilco Finance Limited, NCB, First Heritage Cooperative Credit Union, tongue twister, and of course, FGB. My role here today is to marshal the opening session of the webinar. But before I get started, I would like to share a story. Now, this story is about 2 shoe salesmen that were sent to a particular country to determine the market potential for their products. One salesman was sent to the East Coast while the other salesman was sent to the West. Both completed a basic survey of the market and called back the office. The salesman that was sent to the East Coast reported, "No one here wears shoes." Yeah, bummer. There is no market for us here. The other salesman, the one that went to the West Coast, he called back the office, all in shoes, and he goes, "No one here wears shoes. There is a huge market. Send inventory now," right? The point of the story is that your perspective influences your behavior. If you feel you cannot change a situation, you act in a particular way. I implore you today, when you leave, take the knowledge gained, and I'm speaking to our MSMEs now, take the knowledge gained, and like the salesman who was able to see the great untapped potential, I'm not speaking to our bankers as well, see the potential, right? Right, untapped potential, use it wisely and abundantly and help your business grow. Ladies and gentlemen, help me welcome Mr. Paul Chin, the manager of our Investor Relationships Department at the Development Bank of Jamaica, who will inform us of our DBJ offerings. Thank you.
Thank you, Helen. Good morning, everyone. Here in the room, our financial partners, as well as the persons joining us from cyberspace. So Helen said I was going to inform you about DBJ's products and services. My presentation is actually how to finance your startup and small business. So I'm going to look at just some basic ideas and some thoughts on what you can do as a new business person to get started. If this works. This is a laser. Help? Okay, it should be a tech. Okay, there we go. So first off, let me look at some categories of funding. I'm sure most persons would know these, but let me just codify them for you. We have our grant facilities, we have debt, and we have equity. Those are the three main types of funding options that small businesses will have. Self-financing, example, your personal savings. This is where most businesses usually start, and it allows you to maintain control, and later investors will look at what you have, a skin in the game. Bootstrapping, locally, I prefer to call this juggling. Bootstrapping is a foreign term, and we are going to keep it local. So jugglings, and we know how our local businesses operate. Early product sales are what will keep you afloat. It requires a customer-centric development approach. Now, big words, but all it is saying is focus on your customers in order to drive sales and drive revenue. So sources, personal sources, financing in the form of personal and family, savings, those are what are used primarily to start businesses. And I'm sure most of you can attest to that. Family and friends, and in some of the literature you'll see in bracket fools, to actually lend you money to start something. Relatives, those are persons that we normally tap early. You want to get started, you find Uncle Joe down the road, and you ask him to lend you some money. The downside of this is that it can cause problems within families. So if you don't get invited to Christmas dinner, you start to wonder, what is happening now? Why am I not there this year? It is because you have $100,000 for Uncle Joe. Home equity loans. I've not seen this much on the market these days. And I guess our bankers can, elaborate a little on this if it is in their presentation. But a few years ago, it was quote unquote a thing. You have equity in your property, a financial institution would look at lending you out of that equity. So it is something for consideration. I always say if you don't ask, you don't get. So if you have equity in your property and you want to say to the bank, I want to start a business, can you use this? Go right ahead. The downside, and you have to be careful, is that you can lose the property. Plain and simple. Life insurance, cash value, pretty straightforward. Institutions may lend you, or if it is worth your while, you can simply pull the cash. I've seen that done before. Personal borrowings, including credit cards. Credit cards can provide you with easy access to funds in an emergency. You have to be very careful, though, because credit card debt can keep you indebted for years, especially if you're paying minimum balances. You can be in a credit card loop for 20 years, believe me. Internally generated funds, this is one of the best ways to finance growth within the business. You simply plow back profits that you have been making, and I know a lot of Jamaican businesses, this is how they operate. Bank loans and overdrafts. Of course, going to a financial institution, you need to have certain things in place, and the bankers here will tell you some of the things that you need. Trade credit. If you have suppliers, if you have developed a good credit rating with your suppliers, you can ask them for credit. So you get goods or you get raw material now, and you pay in 7 or 15, or if you're that lucky, you can get 30 days. Angels. Angels are basically people with money who want to help small businesses. Not all angels are in it for the profits. Some angels want to give back, especially to young businesses. And I know of, and I guess maybe Christopher can elaborate on the angels that are currently operating in Jamaica. Venture capital, always sexy. We hear about venture capital. Venture capital is actually, you have to be structured. You have to be operating at a certain level. You need to ensure that you have proper financial statements, you have good governance in place for venture capitalists to take a look at your operation. But it is not outside of the norm or the realm of possibility. You can get venture capital if you have been trading for a while and you have developed a good business practices. DBJ, what does the DBJ have and how do we contribute to some of what I told you earlier? So primarily DBJ's MO, mode of operation, is through financial intermediaries such as the persons on the platform, AFIs and MFIs, as well as business development organizations, and that is how funds are filtered down to businesses and entrepreneurs. So DBJ's services fall under three main categories: grants, we have our loan facilities, and we have our credit guarantee, which is a partial guarantee facility to assist you if you are lacking in security. Currently, we have an energy audit grant, which is in the amount of $200,000, and this is there to help MSMEs understand how electricity is being used within your business, and you can get recommendations from a certified energy professional as to where you can employ different methods to get savings on your energy use. And usually the energy audit grant is a precursor for DBJ's energy loan to MSMEs, and these loans can go up to $30 million. There's a lot of information on the DBJ website. One of the things I always say to MSMEs is that you need to do your research, and the DBJ's website is a virtual treasure trove of information. We have the IGNITE grant, Innovation Grant from New Ideas to Entrepreneurship, and this grant is expected to be launched in October. I'm not sure if the date has been finalized, but certainly by the end of October, the IGNITE grant will be launched. So if you feel that your project or your business is innovative and can stand up to scrutiny, IGNITE grant can provide two tiers of grant financing. One for ideation, so if your business is in the idea stage, you have not yet launched, and you need assistance to launch, the IGNITE grant can provide that assistance up to $3 million. And there is another component, which is the commercialization component. So you have the business, you're up and running, but you're ready to expand. The innovation grant can provide you with up to $7 million to assist with that business expansion. Final thoughts. Is a capital infusion really necessary in your business? Have you assessed the market? Have you looked to see how you are going to utilize that capital? That is an important decision that you need to make. Heavy strings can be attached to capital, whether in the form of a business loan or a personal loan. And I caution that it could take twice as long as you initially project to get your business off the road. One area that I did not include in my slides is the whole matter of business startup cost. You have to ensure that if you're starting your business, you take every single cost into account, including things like legal fees, HR fees. You need to write down and take into consideration everything. And also keep in mind that it can be even longer to break even. I've seen businesses say, oh, I can break even a year. It may work, but it is extremely difficult to recover all of those sunk costs. So your options will be determined by a number of considerations, which will include things like how much money you need, how long you need funds for, where the funds are going to come from, and how you're going to repay the funds. So starting a business is not easy, and it requires quite a bit of thought, quite a bit of research, and that is the reason why we're here today, to give you information to assist you in getting that business started or getting that business ramped up. That would be my presentation, ladies and gentlemen. I will field any questions that you have, but I want to thank you for listening, and I hand back to Christopher. Thank you, sir.
Again, really want to encourage who is online to submit, send your questions in the chat and we'll field them. If there are any questions for Mr. Chin related to the different financing options that he spoke about, or even specific DBJ products, feel free to put them in and we'll get to them. All right, so my job today is to moderate this panel discussion with this lovely panel that we have up here. There are quite a number of commercial banks. I think 6 of the 7 are here, or 6 of the 8 are here. 5, I don't know what number, 5, yeah. And then there are 2 microfinance institutions, which I'm not sure how much small businesses understand that they are financial institutions as well, and you can get business loans. It's not just payday type loans. They operate in the small business space. So we have a very good blend, I think, of large commercial banks, some in the medium size, and microfinance institutions who offer small business loans. So today, as the session says, it's how to finance startups and small businesses. And at the end of the session, I really want the entrepreneurs who are online here and who are in the audience to have a better understanding of what is required to get a loan from a financial institution. So let's take what is said today as gospel, right? I'm sure there are a number of things they'll speak about. It's not just documentation. You have to put yourself in a or have certain track record, which I'm sure they'll touch on. Just take what is taught, what is said today as a teaching moment. Part of this session, or key function of this session is to impart knowledge to you as entrepreneurs. So you are aware of what is required. As I mentioned, as this discussion progresses, please feel free to put your questions in the chat. Anything related to banking, how you can finance your startup, I'll pose the questions on your behalf throughout the discussion, and we're opening it at the end for questions as well. So I'll say from my observation, and COVID came with this little blimp in the middle for us, right? But the landscape for financing SMEs has been changing, right? It has been evolving. I think everybody who is here operates out of an SME unit or has an SME specific portfolio in their financial institution, which years ago it wasn't like that. It was just like personal banking and corporate. So I think the financial institutions themselves have found an opportunity that SME business is business, right? It's an opportunity for the banks to make money as any organization that they do. And it's very encouraging to see that. So we really want to explore how these entrepreneurs or small businesses. I'll start with small businesses first. I'll leave the startup discussion for later. But really let us focus on how can small businesses get finance. So first on my list here is Yannick from NCB. So first thing I'll ask you, Yannick, is what's one thing you want the SMEs to know about your organization and how you guys work to support SMEs?
Okay, thank you very much for putting me first. Good morning, everyone. My name is Yannick Banks from NCB, and there are a lot of things that I would love to say, but I know the time is probably short. However, the first thing that you need to know is that once you start your business, the most important thing is to start your bank account right away. But in the business name, not your personal, because what we've seen is most of the facilities that we offer, they're either only available to companies who have been banking with NCB, or, almost all of them, really. If you have been banking with NCB for like a year or two, then you can get access to those facilities. If you have not been, then it's going to make it difficult and you'll have to wait. And then we have certain unsecured facilities that we've been pushing pretty aggressively. Those, we look at the flows in the account. So if you haven't been banking with us, we can't look at your flows, and then you wouldn't be able to get it. So there are some, and then we've actually reduced the requirements in many cases for opening accounts. So I'd want you to know that. And in some of our packages that were only available to businesses registered for 2 years, we've reduced it to 1 year. So NCB has been aggressively working to try and make things much better, much easier for SMEs. We work with BIGEE hand in hand, right? We have the recovery loan, we're still offering it. And we're happy to continue partnering. Or the CEF, the credit enhancement, we are very aggressive with that. We, almost all of our SMEs have been taking advantage of that. We even have a SME bundle now. So for deposits, so you can come in and you can get a point of sale machine, you can get an automatic credit card, 500,000 limit, and your checking savings account and online banking. So you should ask about that, but don't worry, I'm getting to the end now. In terms of contacting us, I know that sometimes making contact with an institution can be the most difficult part of starting a relationship, but we do have an email address, smecxhub@jncb.com. Let me say that again, smecxhub@jncb.com. And so if you email any of your questions there, or anything that you need, like opening an account and those things, we actually have a hub set up that will deal with your questions or whatever you need. So I'll stop there.
Thank you very much, Jenny. I know each of the financial institutions here want to let you know what they have. I'm going to give each of them a chance to say something on it. But let me see, Garth at JMMB, can you just talk about, I guess, JMMB and SME support from your perspective, and how the bank views that as an opportunity?
Sure, no problem. Good morning, everyone. My name is Garth Aline. I'm a relationship manager from JMMB Bank. So further to what my colleague was saying, I want to also implore all of our startups and existing businesses to, as best as possible, pass monies through the bank account. So what happens is, in addition to assessing the financial statements that you provide to us, we still have to, in essence, corroborate the monies that have gone through the bank account to say, well, yes, even if the financials are saying this, we can still look at the flows through the account to say, okay, we can see that this is the average balance, we can try and move forward with some sort of financing there. But more to the point of what Chris would have asked me, at JMMB we have an SME resource center. So what that does is, upon opening, and even before opening a business account with JMMB, we have dedicated officers that are invested in the progression of your business, to regularize it, because we are aware that it is indeed very difficult at times to access financing and open bank accounts and just to navigate that financial landscape if finance is not your particular background. So if you're not au fait or familiar with how lending works and how account opening and banking in general, which honestly can be a headache sometimes, we have resource center representatives that come and meet with you and come and do a site visit, understand how your business works. We can put you in touch with, through business development officers, put you in touch with accountants that can prepare your financial statements or help you to prepare them, help you to understand and put together cash flow projections that will indeed allow for a better financing experience. So You can approach us with having nothing at all. You've started your business, you registered it. All you've been doing is passing the money through your account. You don't know what to do next. That's completely fine. You don't need to know what to do next. We can definitely, through our resource center, guide you through, this is the next step. This is what you can do. We'll put you in touch with somebody and say, well, here's how you prepare these financial statements. This is what you provide to them. And at which point you can always approach us, myself or one of the other representatives at JMB, to say, well, this is what we're trying to do. You don't even need to know the type of loan you need or how to achieve it. You just need to know where you need to go, and we will then guide you through saying, well, Mr. This, Miss this, Mrs. So-and-so, here's where I understand what your business has been doing. I've reviewed your file, I went to visit your business, I know where you are and I understand where you need to be. As such, this is the type of financing that I think is best. This is how it works, this is how it will benefit your business, and we can go through in a very granular manner. It doesn't matter how much time it takes, just so that we're both on the same page, and all of this is really and truly facilitated through our resource center. So it was initially developed as a response to the fact that when we did our market surveys, we realized that the majority of employed people in Jamaica actually work for SMEs. Most of the employed people in Jamaica work for small and medium businesses. And in that same survey, we realized that, well, a lot of financing is hard for the businesses to grow. A lot of them were, what's the American term, bootstrapping? Right. Or bootstrapping their way from point A to point B, which is a good and innovative way of moving forward. But sometimes you really do need that extra financing, that extra guidance, and that is where financial institutions come in. So our role at JMB is to just make that as seamless and easy as possible through, as I said, the resource center, and if it is that, you know, you speak to either myself or one of our other relationship managers throughout the bank, or anyone that actually works at JMB, you can always reach out to any of them and say, can you please put me in touch with somebody that works in this SME department? All of us would be more than happy to reach out to someone and say, well, can you please contact this person? And we do make it a point of duty to reach out to every and all of the contacts that we do get. So most of our assistance is provided within that SME unit to guide it from, you need anything from a pin to an anchor, and that is what we try to do. So we try to build you out from not having any statements, not knowing which direction to go with the business, to putting together that structure for you, help you to incorporate the business if you need to do that, guide you through the process of depositing the money, getting a relationship manager, and then eventually, if it is your goal to get financing, that is what we do. Okay, thank you. So it's a whole relationship from, as you said, start to end, relationship experience. Right? Okay, yes. Relationship experience is what JMB is saying. Correct. Michael from Sagicor, I read something about some SME training hub. I don't know what it is. Something you guys do over Sagicor to help businesses. You can talk about that a bit?
Morning, everyone. I'm Michael Sutherland, Sagicor Bank. I'm team lead SME business banking. First, Chris, I want to start from the point that it is encouraging to see the business community take the time out to come here, both in the physical space and virtually. DBJ for this sort of webinar, having the different financial institutions partnering to champion the cause of making Jamaica a place for businesses. So in any country, one would understand that to grow the economy, you start from SME. Because, yeah, we appreciate corporate, we appreciate retail, but corporate, you know, they have a limit. But SME, you have a latitude, and leverage where you can expand and increase your business opportunity. So at Sagicor Bank, Chris, we're committed to this cause of servicing the SME in a holistic way. What we mean by that is through our Business Resource Center at SME.
Not to be confused with the SME Resource Center.
So what is interested, you know, just listening to my colleague, which is Garth from JMB, you know, talking about the part or the involvement in the process. We at Sagicor is a similar situation. What is important to understand business community is that it is not just one institution. It's a collective approach. And for us from Sagicor, our Business Resource Center is not only to provide that unwilling support for persons to onboard. If you open a business account, you open trying to seek financing to grow your business. But we want to take a step further to say if there are shortcomings in your business, such as human resource training, customer service training, you can get that sort of opportunity to learn from us. And this, I must say, Chris, this Business Resource Center, we started in the COVID period, which everyone or every company would have tried to minimize and contain their costs. And for us at Sagicor Bank, it is important at that time to launch the Business Resource Center because of the importance of what that can play in the society. So I must say, Chris, it's a joint venture with Jamaica Business Development Corporation, which we try as best as possible to hold the client and guide them in a holistic way. That's essential.
This is before they get access to a loan or after? At what point?
All right, so the end vision of the center is where a client comes in to us for financing, right? Or even open a business account. So there are different officers within Sagicor can help them and from JBDC. So they come in a rough, or what we would call them, not that formal, right? So we provide that sort of guidance and put them in a state of readiness for financing. So that is really the essence and the vision for that center.
Okay, excellent, excellent. So far you've heard about 2 options of resource centers. I know there are a couple others here. Let me just bring, as I said, there's a credit union here, which is First Heritage, and a microfinance institution, which is Wilco. I'll start with the credit union. Can you just talk about how a small business can get financing from your institution? I heard once that you have to be a member and it can't be a business and it have to be an individual. Just speak about how a business can get money from First Heritage.
Okay, Chris, thank you for starting the talking point. And at First Heritage Cooperative, well, first let me introduce myself again. I am Jason Ferguson, manager of the Micro and Small Business Unit. So, as a small business, entering First Heritage, we have a family approach. So yes, you have to become a member to be a part of the family, and then, you know, as family, we will have you covered, right? All right, so we start with a little bit more simplified process than some of the larger institutions. So we are not allowed to have company accounts. So what we do is we will allow a director to approach, to start the business, and we will cover that director if we so choose to go to a loan option with that business by having the company standing as a guarantor. Okay. So it's not the one director that's being burdened, but the entire company has the responsibility to repay. So I know persons might be a little bit worried about, you know, it's a company and there are 3 of us, why am I the only person coming forward? So we have you covered. Okay, so you have now become a member and we're talking about developing your business. Most small businesses don't have financials to start with. And what we have realized is that a lot of persons do not have a business account. And again, what I've heard in this space is a little bit difficult. We are willing to use your personal accounts if you had so use them to transact for your business, and we allow it to assess to see if you can access a loan. Now for the financials, we're a little bit laid back and we won't ask for audited financials off the bat. We will start with in-house financials as long as it's done by a certified chartered accountant. However, if your business is more complex, we may ask for audited statements. So this is how we try to meet with our members to ensure that their business can grow. The other things that we do, I would consider us a boutique store, right? So we're very flexible, and our partners at BIGEE can say that. So you come in and in terms of security, for example, we have a myriad of security options for you to cover your loan. We heard about home equity in the opening statements. Yes, we do home equity a lot.
When you say security, you're talking like collateral.
Collateral.
Back the loan.
Right.
Okay.
So we heard about the home equity and not hearing much about it. That's one of our go-tos. The space at the moment is booming where that is concerned. Property prices, values are going up, so persons are getting increased equity in their homes, in their businesses, and we leverage that to help them grow the business. Not just that, we do a mix. So for example, you come in and you say, oh, I just bought my property 5 years ago, I only have $2 million in equity, however, I need $7 million. But you're driving a nice vehicle and you manage somehow to pay for it by cash. We can also incorporate that vehicle with the property to have enough security. Is there still a shortfall? Then our partners at DBJ will put on the CEF product and we'll cover that shortfall. So there are a lot of options in terms of security that we're willing to work with. Right?
Okay, excellent, excellent. Let me move to the other boutique shop. I don't know if you call yourself that. Okay, good. Wilco, as I say, a microfinance institution, they offer small business loans. I'll ask Nikisha to just talk on how Wilco really supports businesses. I think that the common thought is that a microfinance institution is for personal loans so that I can go to ATI in September and, August, sorry, in August, or I can just buy, more for consumption than for productivity.
Thank you so much, Chris. And I too would just like to say good morning to cyberspace and those of you here. I'm Nikisha Walters. I'm the CEO for Wilco Finance Limited. Yes, initially microfinance institutions were a payday loan sort of situation. So you want an advance, you come get some money and next month you pay it off. I too echo the sentiments of my colleagues, especially Garth at JMB, where the research shows that MSMEs account for over 90% of the tax-paying workforce in Jamaica. And so they're critical to the economic growth of our country. And so we've seen that at Wilco. And we're so glad that we're partners with the DBJ who have allowed us to benefit, to be able to unlend to MSMEs and to be able to take part in their CEF facility, that's the guarantee facility as well, to support the sector, especially through the pandemic when they needed us to recover, to pivot, recover, and grow. We were able to help them there. And we continue at Wilco to grow our portfolios to find solutions, sector-specific. I know the DBJ recently launched quite a few sector-specific facilities, agrobiz, and also transport and entertainment. So we are just glad that we're here in this space. And yes, we recognize how critical MSME success are to our economy. So at Wilco, what we deem it's not just a loan, it's a partnership. We are not a deposit-taking institution, so we work in tandem with our banks to ensure that our customers do bank. But we provide financing, we sit with you, we give you the advice that you need. And just to say that you don't become an MSME overnight, you start at the entrepreneurship mindset stage, you matriculate to startups, and startups by definition could be a business up to 5 years in operation, usually with a disruptive or innovative business model. We have funded businesses within that 5-year space. And so we continue to see how it is that we can help startups and MSMEs succeed.
Okay, excellent. So I recall when I just started in this banking field and credit, I was taught that there are 3 C's to credit. I don't know if it's gone to 5 now or 7 or whatever, right? And the 3 C's would be character, the collateral, and the capacity. I guess character is just checking credit report, ensuring that who you are lending to is of good, sound character.
Yes.
I'll ask FGB just to talk about how important is the character of the SME or the entrepreneur in a decision to determine whether you're going to give a loan or not. And what do you do to determine character, really?
Right. Thank you for the question. Good morning again to our team members here present and those online. What a question to start with. Character. That's what you have. That's who you are. And so when we talk about a credit report, it is a picture of how you have handled what you have taken up. Did I say my name? No? I am Suzette Dawkins, First Global Bank. I'm an Assistant Vice President of Personal and business banking. So looking at your credit, it's very telling. I would say for those customers, when we are engaging in a discussion about lending, you know, one of the questions I will ask, do you know what it looks like? And some have never seen it, and some don't want to see it.
This is what, the credit report?
This is your credit report. Okay. And so we're talking about character.
Right,
and we're going to talk about how that credit report helps the bank to say, what type of character is this individual in managing their debt that has been extended to them? And so we'll look at it, and I will tell you some are frightened by it when we share it with them. And they're frightened because they're not in control fully of all they have taken on their small business. And so our job at First Global Bank is to have a conversation with you to help you move from where we are to where you want to be. Character is determined by what you put in to try and correct the situation. I remember, I'm going to share an example. I was at the branch one day when I was a branch manager, and a customer came in with his wife, and he said he wanted a loan to start a business. And so we're talking about it and so on. And we went through, got all the documentation together. And at the end of the conversation, I asked him, is there anything that you haven't told me in the last hour that we have been speaking that you want to share now? No. So the wife got up, she walked out first. And then the husband said, oh, now that she's outside, he wanted to have a conversation with me. I said, okay, sure, no problem. So she was outside and he sat down. And he said, I have a loan that went bad. And, you know, I haven't said it to her as yet, but I'm sharing with you, and let us see how we can fix this. Now, that's a big whole load that you're putting here on me. Well, we just had a conversation how to help you put money into your business, and now you're telling me this. Long story short, that customer is one of my best customers because we worked through that period. It was with one of the financial institutions here at the podium. That, for me, demonstrated his willingness to fix what is out there that is affecting his character. Now, let's talk about how First Global Bank work with our small business. Small, micro, mini, just an idea. It is a conversation. No two businesses are alike. And so you have to speak to each one to find out what you're doing, how you're doing it, and how we can help you to move from point A to point B to wherever it is that you want this business to go. I will say that the gathering of information for our small business customers is a challenge. They don't write it down as often as they need to write it down. And so for those of you online and those of you present, start writing it down. I bought X, please make a record of it. I bought Y, please make a record of it. Then let's get a bank account open. Now, I'm happy to say that we pride ourselves on making account opening simple. If there's anything that I can say good about COVID, is that it forced us as bankers to figure this thing out and make it simpler and simpler and simpler. So we went to the BOJ and said, listen, we have a group of customers here and they don't have these whole heap of fandangles. Some people need the fandangles and we're going to come to those. But there are some what we call our simplified business customers. They're just starting. It's an idea that they have now put into effect. And so now they want to start a banking relationship. So we have simplified accounts for individuals and simplified accounts for business customers. Once you're running $2 million a month through your account, you can open what is called a simplified account. You don't have to have audited financial statements. You just need to tell us how much, what is the business generating, and we get your account open with simple ID
Is this 2
registration.
million or less or 2 million or more?
Small business people,
So
$2 million or more.
Okay.
So that you're running through your business each month. So once you're doing, so if yours is $100,000, you can open this account.
Okay.
We're saying the maximum
It's
is $2 million.
Okay,
So you
okay.
can't lodge. When you get to over $2 million, that means
Then you go to
you're
another
moving
tier.
out, you're moving into the other tier, right?
Right.
So, but we're here to sit with you and walk you through every step of the process, from simplified to regular business that need audited financial statements, cash flow projections. When you say that word to some small business, tune out. Our business is to get you to understand what that is and how we can help you get your cash flow statement together. Accounts receivables and payables. Big words for some.
I was about to say, you're using some words that...
Big words for some. We spoke about writing down. So it could be writing down in a notebook, write it down in your iPod. If you ever notice a lot of small businesses have these fancy phones. Are you using it for what it is intended to do? Because you can get so much more out of it. Or if you want to write it down, I still like my little notebook. And I see my colleague over there have her notebook. Still like my notebook, and I still write things down. And so I encourage you to write down all the people who you pay and all the people who pay you. The ones who you pay are called payables, and the ones you get money from are these are your receivables.
Okay, right.
So when I say making it simple, come and have a conversation with us, because we're going to talk you through and assist you through how to get started, making sure you're putting your records together so that you can be loan ready.
Excellent. Casey, from Scotia, I haven't touched you as yet, right? Spoken to you as yet. Kind of still on the point of character, right? And this is probably a difficult one for you, my friend. So you have a lot of people who, tried business early in life, ended up not paying back loans. I guess their character would have been viewed as bad, credit reports aren't good, etc. Is there an opportunity really for them to come back out of that? You can just talk on that a bit?
All right. Good morning, everyone. So I'm Casey Johnson Vaughn from Scotiabank. I'm head of business banking for Caribbean North and Central. So as I know, thank you, Chris. I always seem to get difficult things and situations, challenges, but I love it. So I believe strong in everything. Everybody is always redeemable. There's always an opportunity for you in life, right? So a customer who may have a difficulty in that case, where they really default on their loan and they would know looking forward to put their life into a better position and eventually want to actually access funding again. There is a period in which we will basically you have up to 5 years where we would not allow you to kind of like start back from scratch. So pay off your debts if you need as a first instance, pay it off. Once you pay it off, and again, depending if you need help to probably do some debt consolidation, we'll look at that for you and consolidate that debt. Once you pay that off, then we now look and say, all right, you can take back your time and start to demonstrate yourself again. Of course, have an account with us, put your money in the account, etc. And pretty much what we'll do is watch and see over a period of time and to see how you have been operating. Based on that, then we'll decide again, you are more fit again to actually get some form of financial assistance from us. But the main thing is that you have to demonstrate, you have to close that debt, and then you have to now start put back yourself on the right footing. And I think what we normally do sometimes, we give you like a small loan to test first. So, you may get a credit card maybe for $100,000 this time to see, are you managing that properly, etc. So I would say we'll never write you off, but what we'll do is guide you and show you the steps, how to get there. But the most important thing, you have to demonstrate your capacity of maintaining your debt. I always say to customer, try to avoid going into debt I think come in first. If you're having challenges, come to us first, have a conversation with us first. Then we can say to you, okay, these are the different options that you can explore, and based on your situation, we'll see what's best. So even if you have a loan payment, which should have been, for argument's sake, is 100,000, and you're not able to pay that 100,000, but we can come to an agreement. You probably can pay 50 now, and that is now showing that you are good character. Right. You're not evading the bank, you're not fulfilling all your obligations no longer, but you're making the effort to have a conversation with us, tell us your current situation, and we're now coming to an agreement. We work that out with you, and then for a period, and then we go back to where you were. So that is what our recommendation is. Try to avoid for it to reach that stage where now you're going to be in a bad situation, because it doesn't help you.
Right, but you big financial institutions are intimidating to the small businesses and entrepreneurs. They know they owe you money, so it's difficult for them to come and say, I can't pay, so it's better them turn off their phone, right?
So which is, no. That's, so I'm saying to anybody in virtual land right now and here, please do not do that, right? What we will say to you, and I mean at Scotiabank, we have more than 40, over 45 officers island-wide that you can go to and have a conversation with to see what's happening with your business. You also equally outside of the officers, you have branch managers. So you have relationship with these persons, go and have the conversation. If you do that to yourself, you're harming yourself than helping yourself, right? It's better right now, you're now leveraging what you have to take the best opportunity versus you hiding away and not paying the money. And the truth is, I think a lot of persons tend to think that we are an ogre, as in the bigger financial institutions, and we're not. The truth is, we're always trying to work with you to offer the best solution. And it's just like we say in your business, you have your products and your services. You're going to find a customer who is going to pay for your goods and services, because that is how your business is maintained. You're not going to always go to a man who takes your good and says to you, I will pay you back next week, and next week turn to 3 months, into 4 months, can't find this man, elusive. You're going to cut off that person. Similarly, the same thing with a bank. We want to know that and remember, we're holding people's money as a depository institution, and so we have to be financially prudent and responsible with your money once we lend it out. And so what we want for you is to look at that. It's the same principle. You want somebody who's of good character to lend your money to or to sell your product to. We also want to do the same thing. But there's always a way you have a conversation. It's in a relationship. And that's why right now we're very big on relationship at Scotiabank. Let's talk. Let's have the conversation. Don't run away. Come to us, because we're here to help you.
Thank you very much. So on character, I think the panel here has spoken about it, and you can always draw the reference. If you've I think all of us have loaned money to a friend, and the friend take forever to pay you back, or don't pay you back when they're supposed to, or pay you back piece, or hide you out, etc. Next time they want to borrow money, you're not lending them, right? So it's the same principle around character, right? It happened with your personal relationship. It don't even have to be money. It could have been lend your car one day and lick it, right? And you just know you don't lend them back. So it's about character. The second C, which is on collateral, I see a number of questions in the chat. I'm just going to throw one out and anybody can grab it, or a statement. Business loans are over-collateralized. Commercial banks, financial institutions cannot require real estate to back every business loan. I don't know who wants to take that first to just comment on.
So let me comment on that. So for business loans, there are different levels of security that you can get for a loan, right? So yes, you have real estate, you have cash, or you have real estate, which can be your commercial building or your residential property.
I suppose
right?
I don't own no property.
Cash is also another option. That's why I say it can be cash secured. Now, remember, unsecured is the most, as the word suggests, unsecured. So we will do that, but again, we have to make sure, again, come back to character, that you demonstrate that you are of certain character, so then we're able to lend you unsecured. Outside of that, what we're seeing is use whatever collateral, whether it is a secured collateral, as I mentioned, whether it can be commercial, residential, or your cash, and put that and we'll hold it for you to get the loan. I don't think that's a very difficult ask because again, if it's a trade-off, you want something from us, we trade off with something and then we hold it for you and we give it back to you once you fit or you keep the agreement, because it's an agreement that we have. So once you fulfill that agreement, then it's not going to be an issue. I think one of the things that we've been trying a lot is to educate small businesses that you have to see this. If you are going to, we can't be irresponsible and lend you money and we're not able to actually recover from that. It's very, very important. So what we've been is trying to educate, like this forum, what do you need to do to make sure that you do not default on your loan, or what is the best loan or financing option for you, for your business? I think oftentimes persons are not clear on which financial option is the best for you, and you may choose one which is not the best one. Like I'll say to persons, credit card is not for everybody. Right? Because again, it has a higher interest rate, and if you do not able to maintain and pay it off, it's going to recur every month, and you see it and you're saying, oh my God, it reached $1 million, $2 million, what's going on, right? You know, so we always say, depending on what, choose the best option. Operating line may be the best option for you. You can pay down on the operating line, the interest is a bit less than that. So again, it's all of that we'll take into consideration. But I don't think we're asking for too much in terms of the collateral. And then we can make a plug for you guys. If you do not have the collateral, the CEF, which is the Credit Enhancement Fund, we are able to offer that. You can use that as the security for the loan if you don't have a collateral. So you can come to us and speak to one of our business banking officers who will be able to help you with that.
All right, excellent. Michael, you want to, if I don't have cash, I don't have real estate, I want to borrow $5 million to buy some equipment and for working capital. Can the equipment be used? Like what else can I use, really?
All right. Thanks, Chris. Casey, I would have started the conversation, right, about collaterals. And for me personally, and from a bank perspective, is that one, banking is a way of life, and that's the principle, right? So in answering that, we have to start from there. And it's going to come to relationship, because persons going to have perception from the perspective of not knowing the information. And oftentimes I said, boy, God, let me say, Sajikor not helping him, they want over a lot of collaterals. But if you ask a question, did God went to Sajikor and speak to anyone? Maybe no, maybe yes. But Chris, in answering the question, certainly the equipment, in purchasing the equipment, can use as some sort of collateral. From Sajikor perspective, we do lend unsecured facility. And it unsecured on the basis of knowing that relationship. And knowing that relationship starts from the day you open that bank account. And that bank account is not to say it must have millions in bank account. What we're asking for is a pattern of payment, a pattern of deposit. So we're not saying every day you're going to deposit in your account, because some businesses are different based on logistics. But the bank would have provided different avenues, such as a point-of-sale machine that flows and come in the bank account to show a picture as to how your operation look like. And as Keisha, my colleague, would have said, remember, our responsibility as a financial institution is to show up the sustainability and a corporate governance framework to say your funds with us is secure. And in displaying that sort of behavior, we want to know that we're placing our funds in the hands of persons who understand and know what is asked of them with that lending financing. So Chris, in answering the question, yes, the equipment can use, and it's not only limited to one sort of collateral. We can have a dynamic in terms of how we can package that collateral to help the client in financing that product and service.
Okay, maybe what DBJ should do is we put out something to say the banks accept all of these and they come to you and you guys work out how you shuffle it, right?
Yeah, Chris, because
it's about information, right?
It's information, and I like this sort of forum to educate or continue the conversation that the business community know that we as financial institutions have a place and a role to play in developing the country. And in doing that, we cater some or package some products and services just to help the client. But it starts from relationship, communicate. And I always say to persons, I always say to the business community, when you're in a relationship, the only thing going to leverage that relationship is communication. That is important. You have to start that conversation. It can't be just the bank. The customer do have a part to play in that conversation. So I'm just saying, team, online, in physical space, just start the conversation. And you certainly will be willing to help you.
All right.
Chris, before you move on, I kind of want to add a bit to the conversation, security, collateral, and that type of thing. So, firstly, we have a really good panel here. I wanted to answer probably all the questions you had so far. All of my colleagues kind of took it and answered it very, very, very well. Another thing I would love for entrepreneurs, small business owners to realize about collateral is that your willingness to provide something that is near and dear to you also indicates some level of character to the financial institutions, right? So if you are willing to put up your business place, your house, your car, whatever investments you may have, the equipment that you struggled and bought and all of that, it shows me that you have a vested interest in the success of your business. So in our application, we can then say, here is what the client has. We may need to support it with the DBJ CF, but the client is now providing us something that is of considerable value to themselves and the success of their business. And as such, there was a term that they had that Mr. Chin had used in his presentation called skin in the game. So if you can provide us with skin in the game, it will only help us to make a more informed decision and to come back with something that you can work with.
Thank you very much for that, Garth. I know Nikisha and Suzette and Yannick want to touch on it. Suzette,
Yes.
you go first.
My colleague said it, having skin in the game. And I want to talk about collateral and pricing. The pricing on secured loans, that's where collateral is pledged, the cost is cheaper. Unsecured loans are almost double the interest rate than your secured facilities. So when we are looking at a financing structure for a small business, or any business for that matter, you want to look at how is the interest cost, the cost of the interest cost going to affect your cash flow. And so when we look at your personal financial statement or the audited financials, we look at it to see what is stated in it. What are the assets of the company? And so we will share with you what is the pricing for a secured facility that is with collateral and one without, and then fit that into your financial statements to see how it impacts the business.
Excellent. Yanni?
Right, thank you. So ideally, we know that you would prefer to get a lower rate and do fully secured loans. But as I mentioned earlier, we have two main unsecured facilities, the Merchant Advance and the Quick Biz at NCB, and you can get up to 55 million unsecured with the Merchant Advance. So it looks at your flows. And we do pair it with the CEF. So if you just don't have the collateral, but you have the flows, then we have solutions for you. So you don't have to feel that because you have no collateral that you can't get a loan. And in fact, we have many different packaged loans. So.
Excellent. I think that addresses a comment that was made that the banks seem to not look at the business as an asset itself, but the collateral that surrounds the business. So if the flows, as you mentioned, can be somehow used as part of the security for the loan, then that kind of shows that they do look at the business as an asset, Maybe they need to look at it as a bigger asset, but you know, it's something that they would do. Nikisha?
Yes, thank you, Chris. That's something I wanted to speak to. My colleagues touched on it. We call it receivables financing. So pretty much at Wilco, we said it's a partnership. So we do work with you, understand your business. You may have creditors or you may have contracts out there with third parties who are willing to assign their payments to us. We can look at holding those as security as well. In addition to the regular readily realizable collateral that we spoke about before. So we're more flexible as well. As I said, microfinance, not the bigger banks, not the traditional, but we are more a risk-reward pricing model. Our risk appetite is a little bit higher. And we sit with you and we really try to understand how it is that you want the help and how it is that we can partner with you to assist you to get the growth that you need.
All right, excellent. So, as I mentioned, we're going through 3 C's, right? We dealt with character, which is the first thing that they look at, which is most important. Second, collateral, and I feel like collateral should have been third, but I'll get to the other one, which is capacity, which is the ability to repay, right? So I guess that is where you're looking at. If the business itself will make enough money to pay back the money every month or every quarter, every year or whatever the case is, right? Structure of a business is important to be able to determine how it will run and how much money it will make and how much capacity it has, right? Kesa, you want to touch on business structure or advice for businesses out there related to structure? I don't know if you guys have programs that help people with that or if you just want to talk about.
So thank you so much for that question. So we at Scotiabank, we have a lot of programs to help you with how to structure your business and to guide you. So one of the biggest programs that we have right now is the Scotiabank Vision Achiever program. That's where we choose 25 SMEs from across the island. Do not have to be Scotiabank customers. They are non-Scotiabank and Scotiabank customers. We bring you into a coach, an international business coach, who take you through a 17-week program. And what she does is literally look at your business and give you guidelines. You get templates. And it's like a 7 model. So it walks you through your structure, your procedures, your policies. So when you're finished with that course, as an individual, you're transformed and then your business is transformed. We've been doing that for more than 8 years. So we're about to get another batch that's going to start come New Year, as in January. So this batch is going to be graduating in September. So that's one of the programs that we work a lot on. Outside of that, we do a lot of webinars, that we do a lot of education. So maybe throughout the year, we may end up doing 10 webinars or more. And we do that some on our own, some of them are through partners. So either we work with JBDC or we work with PSOJ or we work with MasterCard, different, to guide you through how do you structure your business, what are the different systems, how do you manage your receivables, how you manage cash flow. So during the whole pandemic, we did like seminars on how do you manage your cash flow during the crisis. You know, we actually have customers that we use as real testimonial come back to you to tell you what they do in their business to help you and guide you. So we do those a lot of. We're very, very big on capacity training. That's one of our biggest things at Scotia. Outside of access to finance, we offer training a lot. And that is very, very key. And you know, training is not cheap, but we invest in it because we believe SMEs need help to understand how to structure your business. And those structure include how you manage your finances, how the staffing that you have, do you have the right staff? Do you have the right amount of staff? You know, do you also have the right directors? You know, is your receivables, do you have a system to even track your payments, your inventory? And we also provide expert advice to show you, give you some examples of some of the systems that you can use, what are some of the apps you can use to help you to run your business more effectively, you know, whether it is accounting or if you want actually your customer relationship management. And the other thing that we also have is use our own customers who have the same services that you can utilize from them to help you to structure your business. So that is how we have been helping our customers to help them to have the right structure in their business.
Jason, let me bring you back in. Structure is team. How important is the team who can do the business? As in, many times people come as a one-man shop. How do you view that versus somebody who comes with a structured team or maybe board advisors, etc.? Can you just touch on that?
Well, a one man versus a team. The difference is the team may have the expertise on board. For the one man, you have to seek the expertise. So for First Heritage, we would partner with the DBJ, because most of our persons are small businesses, to a lesser extent, medium-sized businesses. So they have a funding issue. We would use the DBJ grant program and the BDOs that offer their technical assistance, and we will have them help to develop these businesses. So we have marketing, accounting, IT services, and through the JBDC, the entire business plan and the running of the company, the model, etc. And a host of other services. So that's how First Heritage tries to bring in that whole corporate structure and the governance. Now, I want to take this opportunity to talk about governance. Now, we have heard it, and the reason why we're having this panel this morning is because of it. There's a whole talk about difficulty to access financing, but governance is the major issue for these SMEs when we talk about getting financing.
And what do you mean by governance?
When we talk about governance, we're talking about your structure, right? You having policies in place, you having a company account, you writing down and making notes of all your expenses and your incomes. Now, we as financial institutions need to be able to understand your business. We know the regular man out there says, boy, I know I do my thing, man, and I make the money and I want the loan. You have it in your head, and they're very brilliant people. They hold a lot here. Now, we cannot see it until it's on paper. We need a little black and white. We need systems to show us what your business is doing. So it's very important that you set up that governance. Having an accountant, a very good accountant, can make or break a business. Many applications have come on our desk, and the accountant is the reason for the failure of that application. To the point where I heard one of the colleagues says it before, we have to look at the bank statements to make the decision. So as a SME, try and find yourself a very good accountant, not somebody who takes some money and provides you with statements. If you did an audited financial statement, you should have a debriefing to say, hey, we have audited your businesses. These are some of the inefficiencies that we see, and these are our recommendations. That's how you grow your business. So when we talk about governance, we especially talk about the financing of the business and, of course, your structure, ensuring that you have the persons with the know-how. So that is very important, and I couldn't leave here today without expressing that to the SMEs. You get that right, and we will be able to finance you.
Right. Yannick, I'll ask you to comment on it, but just to say, you know, I've said to entrepreneurs all the time, you want to go into farming, for example, but you never learn farming, nobody never learned farming, but you just think farming nice to do, so you want to go in it. It's going to be very difficult for, whether it's a bank, a normal investor, your friend, to say, let me lend you money for something that you have never done before, and you don't have, whether it's the qualification or the experience or the training to do it. So it's very important that the team that you have around you is able to do their respective parts. Whether the team is somebody who have a finance background or accounting background to do that, somebody who have sales, somebody who understand the technical aspect of the work you're doing. Team is very important. Sorry, go ahead, Yannick.
Well, you mentioned the team and the individuals. So I just wanted to say, you know, that at NCB, the sole proprietors are near and dear to our hearts. And in fact, we have, I would call it a game changer coming. I can't tell you exactly what it is. But we have an offering, and it's only for sole proprietors. So I just want to make that clear. We have a lot, and we cherish them. And as Casey was saying, we actually have our program Rev Up. You guys may have heard of Sandra Glasgow, and she's the one who is in charge of First Angels, and they're a startup company. But she also has Rev Up, which, I mean, she has brought in people all over the world with expertise with these huge companies. And they provide training, and NCB has sponsored, you know, our SMEs to do that. So if you want to sign up, you can. It's not completely free, but the cost is nominal. So, yeah.
All right. Michael or Garth, you want to comment on
Chris,
structure, governance?
Governance, and it's pretty simple. We at Sagicor Bank, continue to hold our clients and from the perspective that it is not just coming for financing. It starts from, I think my colleague would have mentioned about having a good accountant, and that's indeed, because if you have a restaurant, you must have the chef in your back pocket because that's service. And if you have a client come to your restaurant and dissatisfied, then certainly the person won't come back. But it starts from understanding and appreciating the financial statement. So my sort of tweak to leave it to the accountant, for me, I think it's a no-no, because you must, as a business owner, appreciate the information, even if you don't know everything in its entirety, but at least you know what the business is doing in terms of performance on an annual basis, or for some persons like quarterly or even half year. So I'm saying don't leave the numbers to the accountant only. Let the accountant and the skill set help you to understand and appreciate what the business is doing, because oftentimes when the clients come to us with the application, you have a situation that you need to make a decision and you ask a question they don't know. Talk to the accountant, and that's fine in some cases, but you must understand from a governance standpoint, the information about the performance is not just creating a financial statement. It's a daily activity that you would have conducted or that you would have been conducting throughout the entire process. That is what you're going to reproduce on a financial statement. So you must understand and appreciate what the financial statement is telling you, because it will tell you a story. I'll give you a perfect example. I remember a couple of years ago, I was looking at a company. The company was in construction. And it's a major company and a major deal. And one thing I said to the person, they came to us for financing, and I said, do you know how the business is performing, sir? And he said, they need financing. And did you know that over the last 5 years, the company would have making loss? But to him, that wouldn't been, he wouldn't have looked on that, because he's getting the flows coming in on a daily basis, on a weekly basis, but not getting appreciation of the financial, to know that the company would have been recording loss over the last 5 years. And coming out of that discussion, then he would have said, boy, this is the reality. But I can tell you, a lot of times, it's a blame game conversation. And I think I must commend you guys, DBJ, for this sort of dialogue, because having the different financial institutions, I think that's the right start in the right direction to say, hey, all of us need to echo the voice, the importance of how we can have that sort of dialogue and partnership in making Jamaica a place for growth and development.
Excellent. Garth, how does JMB help business? If I come to you, I don't have the financial statements or whatever on here talking about. Like, how can I get that out of my head onto paper? Is there any support for that, or?
Yes, Chris, it's actually the first question you asked me today. So I'm gonna circle back to our resource center. So I was saying from a pin to an anchor. So I personally have had clients that had no financial background, no financial statements. And what we do is we put them onto our resource officers. What they do is they put them in touch with business development officers, or they come there and they sit, they look at your receipts, they look at the business processes, the procedures and everything, and they help you to prepare those financial statements. Realistically, there's no way we can circumvent the need for financial statements in financial institutions.
Right.
We are not the owners of the business, we only seek to understand it to provide assistance in whatever way possible. But the only way for us to go about doing that, because we are responsible for everyone's money, is to understand in a deep way how it is your business works, and to present these things to say, well, based on this time frame that has elapsed, this is how the business has been performing. And once again, there's no other way to do it without having the financial statements prepared. So we're not going to say if you don't have any now, leave us alone, come back when you have them. We will then help you to prepare them and help you to prepare them in a quality manner, because as Michael said and everyone else has said, your accountant can make or break your business. It also underscores the importance of having a good team around you. So because you're a sole trader or sole proprietor, it does not mean you don't have a good team around you. It's really just how you have registered your business. You are the person who's trading as, and that is just how it is. But you have very large sole traders who have a finance manager, an operations manager, an accountant to do this, someone else who does this, someone else to do that. And even if you are a big limited liability sole trader, whatever the case may be, the importance of division of labor cannot be understated. You realistically will not be able to do everything. You can't be able to manage your scheduling, your purchases, your receivables, your payables. It probably will drive you crazy. And then if you're mad, then the business is gone. Right? So it is very, 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 very important to employ and partner with people who are coherent and cognizant in what they do. Whether you assess that, whatever way you assess that is up to you, whether it is somebody that has multiple degrees, or somebody that you know from a personal standpoint is very good at this. You have a lot of people who are good salespeople to grow your business. You have people who are good with numbers. So people that can do accounting, people who can do sales and purchases and whatever it is that is necessary for your business to grow. A team is very, very important regardless of the business structure. And these are things that we also look at, because as your business scales, you cannot honestly manage all of it. So if it is that you have an application where one person does everything, it's really difficult to look at it and say, well, this is something that we can say is a good going concern. What is your succession plan? How do you move from here to here? What happens if for some reason you are temporarily incapacitated, you met in a car accident, God forbid, or whatever the case may be? How does the business operate until you come back? So once again, it is equally important to have people around you that can steady the ship until you come back and you can look towards the future profitability of your business. So JMB once again will help with putting people in place or providing advice as to how to get this documentation done, and advice as to who can manage what, or how do you break down these business processes.
Nikisha and Suzette, I'm not leaving it out, right? Let me go with Suzette first. You had a comment on...
Yes, on structure and capacity. Capacity. Very important. The financial statement tells you how much more can this business take on. So it's important to have that financial statement. And at First Global Bank, through our SME hub, all of our business bankers, all of our branch managers, all of our senior managers within the business will help you to get that done. We will direct you to the support areas where you can get that done. And I can't emphasize enough the importance of getting the help that you need for your business with the talent and the expertise that exists. You have far too many business customers who want to do everything themselves, and so want all. So the importance of having your financial statement tells you if this business can take on more. I would say that a lot of times when we're having a discussion with customers about financing, when the bank says no, it doesn't mean it can't happen any at all. It means not now. The business does not have the capacity to take on additional financing. Please do not go and borrow it elsewhere from your family member and so on. You are creating a problem for yourself if you do that. Continue to take the advice that is given and the recommendations that's given to say, this is when you can do this, so that the business doesn't break from you trying to put too much loans on, too many things on it.
Thank you for that. So I think a common thing that we've heard from the financial institutions is in order to get a loan, you need some kind of financial statement, whether audited or otherwise, and many of them will help you to get that done. You need to have a proper business structure in place, whether that is team, who own the business, who advise in the business, and again, that will oversee the fact that you're doing your accounting on a regular basis. Nikisha, is there anything else that you would say that the SMEs or entrepreneurs need to come with for you to feel comfortable to lend them? Or if you want to put it another way, what is another common mishap or missing piece that the entrepreneurs come with and want financing?
So thanks for the question. Chris, I'd just say my colleagues covered it really well. In addition, I'd say we did speak about the importance of depositing funds through your business bank accounts, because in addition to analyzing or assessing your statements, your financial statements, we do want to be able to corroborate some of that information with what happens actually on a day-to-day basis, on a month-by-month basis. But I'd like to take a step back. I know we haven't been speaking a lot about startups, but just to say that startups and those who would have been financed via grants or venture capital or family and friends, when they eventually matriculate to a stage where they can get to an institution and get funding, a lot of them don't, because they don't have the guidance that they need. So you get a grant, you get the grant, the Ignite grant, but who do you have holding your hand to ensure that the governance is in place so that you can get to that level where the institutions will be able to look at you and say, hey, yes, you're ready for financing and you're now at a stage where you can afford it. And we can see that because you would have had proper record keeping, you'd have had a proper team in place. So I just want to add really that, to say that that's important. It's good that DBJ has the Ignite grant that's going to be launched, and also I see where there are quite a bit of things happening. There's a JAMSEF fund that was done between VM and Actors Partners, which we know about. A lot of avenues for startups to get funding as well, but how do we ensure that they scale and be able to come to us?
How long does it take for somebody to get a loan? I don't know who want to answer that. Nikisha, you want to go first? Like if
How long? Well, it all depends on if you come ready with everything we need. So sometimes the delay is because of you. Our businesses, sometimes we give you a list of what you need to bring in, and they'll say, all right.
That list is what, 3, 5, 10, 20?
So the basic requirements, we're similar to what as you know, the microfinance space is now regulated, so we do have to answer to our supervisory bodies, and we do have similar requirements. So your regular identification, business incorporation documents, your financials, your bank statements. How soon you get those to us is the sooner we can assess, and I know I speak for everybody else. And the sooner we can get to start your application. So you may have, okay, yes, I'll give you 3 things of the 5, but then the other 2 don't come till 3 months, and you hear, boy, them slowy, you know? You know, so it really is a partnership. Dialogue, and to ensure that you do meet, provide what is asked so that we can move quickly.
Right. A common thing I hear from entrepreneurs is they go to the bank give them a list of 5 things, and get the 5 things, and the bank asks for 5 more. And maybe them get 5 more, and then the bank asks for 2 more. Michael, you want to explain why that happened?
Chris, before Michael chimes in, let me try and help out my fellow. A lot of times we do try our endeavor best to provide all of the requirements upon that first contact. So your standard KYC documentation, whatever financial statements required, and depending on the type of loan or what may secure the loan, we will require additional documentation. However, there are times, if we're being completely honest, that when you review the documentation provided, it causes more questions than it does provide answers. So if, for example, you are looking for a conditional approval on a facility that is secured by, what was the popular one we've used here? Home equity. And you didn't give us the valuation initially. When we do get that valuation and we do actually read through it, go through it, we don't just submit them and send them off. And oftentimes you see small things, a zoning issue, or you get a surveyor's ID report and there's a breach on the property or an encumbrance. Oftentimes when things like that happen, we do have to ask you for additional documentation to support the application. So we're not trying to be onerous, we're not trying to frustrate you. It's just a genuine review of the application to say between the relationship manager or the adjudicator that is reviewing the application has seen something on the documentation provided that requires clarification. It could have also been something that was not brought to our attention initially. A loan facility that did not appear on your credit reports, but upon a review of the bank statements, there's a standard payment that comes out on the 28th of every month, $176,000. We have to ask you what this $176,000 is, just so we know, is it something you're saving? Where does that money go? Or are you paying something that you, and I'm not saying it is anything that you're trying to mislead us. It could be something that you did not readily identify as a liability. Probably you just repaying some money that a friend loaned you for your startup. Those are some of the things that can happen across financial institutions that may seem like it is dragging the process along, but really and truly, all we're trying to do is cross our T's, dot our I's to ensure that we're presenting the best case possible to who will eventually make a decision on your application.
All right. You have more to add to that?
He said it all.
Okay,
What I was
okay.
saying, just to reinforce that, it's going to come from conversation. And I said communication is a big part. Because oftentimes is when we come back to the client said, boy, I never remember, or I never thought of it. But as I said, it's not a blame game situation. But what's going to help us and try to reduce the turnaround time is that first conversation where you have with the client to say, let me know exactly what, I don't want any surprise. I don't want, when I send the application to our adjudication team, I learned that, boy, you have this outstanding. So for me personally, and from a bank perspective, irrespective of how we look on it, we just need to have that dialogue. Just have that understanding. And any relationship, you're going to have times when things aren't going to go well. But what's going to break the situation is really communication.
Thank you. I think Garth and Michael said it very well. I don't know if there's anything that can really be added to that, right? It is, as Garth said, they initially want 5 things, but it's not from you submit it mean it automatic, right? They have to look at it and if it works. And to be honest, why them asking for more is because they want it to work. At the end of the day, all of them want lend money because that's how they make their money, right? And it's the same business like how you do your business, that is their business, right? So,
Chris, you know what? Just listening to you and what I said, I remember going to primary school. And you always said, why is this teacher picking on me? And down the road, you would have understand that the teacher looking out for your best interests. And it's the same thing with banking. If you didn't want it to work,
we wouldn't ask.
We wouldn't be asking the question. Because as I said, fundamentally, what we do is try to make money by form of interest income and fees income. And that's just standard.
Yes, exactly. It's a lot more work, Chris, for us to just go through the process. We don't really want to go back to education 2 times. We wish the first time you give us everything, it just go through, one shot, right? So which is why it's always key that we always ask the customers, please just tell us everything, disclose everything up front, because the sooner you do that, we can tell you everything that you need, and it can take you the shortest possible time once you do that.
Yes. And just to add, there is nothing more pleasing to us when we see approved. To pick up the phone and call you. It's just exciting to call you because we are seeing what you want and we're our path in making it happen.
Yes.
So we want to do it, yes. There is an underlying, yes, we get paid. But for most of us who are on this platform that have been doing it for a long time, we do it because we want to see your business succeed and we want to see it grow, and we want to know that we had a hand in making that path happen.
There's a question in here, kind of switching it a bit. I don't know who wants to kind of take it up. They're asking if banks offer grants or sponsorship to SMEs. Maybe I should answer that. No, maybe I shouldn't.
Yes, you should.
I know DBJ offers grants. Right? I'm not sure any of these institutions offer, they're not in the business of offering grants, they're in the business of lending. Right?
Through the DBG. Through the DBG.
Well, Chris.
So that's why we're your partners. So we work with you. So when they want a grant, we refer them to you.
Okay, all right. So they're the channel to us. Jason, you
so
have
Chris, yes, we do work with the DBJ and they have a lot of grants over there. So SMEs, you need to check them out on their website. But for First Heritage, we have our Unchop Awards. It's not just an award ceremony, but we also offer a grant to the winners. So we open just around this time for September each year, and we will award 3 persons at the end of the program. During that program, we do offer the support to develop the business, and at the end of the period, they will do their sales pitch, and we will then select from the best 3 pitches.
Right.
So that's a way to get some funding from First Heritage for your startup.
So I would say to all the entrepreneurs, ensure you follow all of these banks on their social media channels. I'm sure whenever there are different competitions, opportunities that come out, they will put it there. And clearly staying with DBJ. Because we have grants and we're going to have more grants that we're going to put out.
Chris, can I put up, love?
Yeah, man, not a
so
problem.
Apart from the grants, so we have different programs. I mentioned about Vision Achiever. When we choose the 25 persons, the top 3 persons have an opportunity to get $5 million in cash and prizes. And that is if you do, once you take on all the learnings, apply it back to your business, you choose 3 companies. And each company can get, like, they get a grant from DBJ as one of the prizes, but they also get like 500,000 cash prize also from us and from our other partners. They get also access to, for example, services like from Trend Media, that is free advertising. So if you want digital marketing, online marketing from the Gleaner. So it's all of these combined why we are able to give you those additional way of, getting free money. But you have to come to put in the work to get the free money. I have to put in a last plug-in for one of the programs that we also have. We recently launched a Scotiabank Women Initiative, and this is geared at women entrepreneurs only. In that program, what we do is have a 3-prong approach. We provide funding, we also provide training and advisory board. Advisory. So what that means, so you just ask about capacity and also ask about structure. We recently just had a corporate governance training workshop for 2 days. We actually opened it for women across Jamaica, anywhere, apply to be a part of it. You're able to come. We brought in a lawyer who basically walk you through how to structure your business. So they showed you if you want to have a board, these are the steps that you put in place to have a board. Take the feedback. Take your questions. We also did this whole thing about digital, about if you want to know how to get your business online. We did training, and we also have a fund. So the fund is where you can get access up to, depending on the company, $100 million to fund your business again. So we have been finding other ways how to help. And again, everything is free training. You don't pay for anything. You get that. And part of the whole aim of it is because we want to ensure that we help our SMEs. Our biggest thing is to really help you in any way possible. We're extreme, but I am very passionate about SME. Like, nothing gives me more joy or pleasure in seeing a customer. Like, I remember when they came in the first day, like in the program, and when I look at them 3 months from now, you're one of the same person standing in front of you because they have grown as an individual and their business is just booming. And I'm like, wow, you see them on social media and body doing, and I'm like, this is excellent. That's what we really want from all of our SMEs. So we just want them to see us as a partner.
Right.
Just seeing that we're there for you. We're really not your enemy. just talk to us. It's a relationship. If you take the time just to have a conversation with us, you will be surprised all the things that you have access to that you did not know. And I'm sure today, after this conversation, every single SME who's in the audience or online, they're now seeing that, listen, I didn't know the banks do all of these things, that they can help us. So you can come to any one of us because we have different programs to help you, to guide you, to make sure that you can be the best company that you can be.
Excellent, excellent. There are a couple questions here related to, I guess, what's the maximum you can, let me start with Wilco. What's the maximum loan you give for a business?
It also depends on the program. For example, we, of course, we're accredited. So through DBJ, we were able to lend up to 10 million through the recovery loan the other day. Generally, though, our maximum business loans run between 2.5 to 5 million.
All right.
But it, as I say, access also depends on what's there in the market.
Right.
But yes.
For First Heritage?
Okay, so we have two categories, our microloans, so they work on both sides, micros and SMEs. For the micro, the limit is 500,000. For small business loans, it's really dependent on the risk. Our largest loan today would be 65 million.
Okay, so it varies. So I would say between Wilco and First Heritage, if you want to borrow from 0 to 65, let me say that, right? You can get that.
Yes.
First Global, what's
Yes.
the maximum?
I would put the question,
Or the range.
right, I would say the question is, how much money do you need? How much money does the business, how much money does the business need? And then look at the financial statements to determine if the business can afford
we
it.
understand
So we lend 10 million. So we have our chicken farm loans. We go up to $50 million for those, and we work with DBJ for some of those. So we look at the business, look at what it is you need, and see once it can fit into your financial statements, you have the capacity to pay it, we're going to lend it to you.
Okay, so they will lend any amount you want.
That the
As
business
long
can
as you are able to show that you can
All
finance it or repay it. Right?
Yes, I think that's a similar situation for the rest of the commercial banks here. It's really dependent on if it is borrowed through a specific program offered through the DBJ, but if not, I wouldn't say there's a prescribed lending cap. It's just dependent on the affordability as well as the overall condition of the application.
Yes.
So for us at Scotia, it's a slight difference. So we have different tiers. So we have small to medium, and then when you move from a medium, we have the corporate and commercial team. But within the corporate and commercial team, we have a space that's called mid-market. So that's when you move from a threshold of a SME. You're not fully corporate or commercial yet, but you're heading there. So in that mid-range, that's where you will probably not be in the branch space anymore. You'll now have a corporate manager who will manage your account because you are now over, you're gone to a threshold of in most instances, it's over 100 million. You're gone over. Once below that, then you fall within the SME space. And then when you go up, you go into your billions now and stuff, then you go into corporate and commercial.
Yeah,
so
well, this audience is a small business audience.
So I'm just, right, so I'm saying, so in other words, why I had to say that is that we can't just say for us it's broad, because at our bank, we have a limit. So if it is below 100 million, then you will fall in the SME space that we can lend to you. Once you go over that, we can still lend to you, but it will be at a corporate level, in other words.
Still in the bank, but
still within the bank, but still in the bank. So we can lend you, as I say, it can be endless, but we have different tiers as to where you're falling as a customer.
Same for us, Chris. Sadhguru Bank, I think for the business community must appreciate that segmentation is always important because it has different focus, different dynamics, and as Keisha and Garth would have mentioned, the risk appetite and the risk assessment must be different. So SME, Sadhguru Bank is 200 million and below. Anything over that, we move it to our corporate team because it needs that sort of focus.
All right, I have Sorry, Yanni, go ahead. I have 2 more questions and then we're going to wrap up.
Okay. Yeah, so very, very quickly, so we don't have a limit really for SMEs. We actually just look at your turnover. So anybody who has a turnover of 600 million or less is defined as an SME for NCB. So some of our package loans, the boost is, the maximum is 250 million. And our energy loan, which no one knows about yet, but we're ready now with that, is 75 million. Some are 50, some are a little lower. But in terms of, there is no cap. So it can be pretty large within the SME space.
So what happened to minimum? Because I'm going to keep going up here. So who earn 400 and 600? What if I earn 5 million and I want to borrow 2 million or 5 million?
Yeah, we have that, yes. That's within our system.
Okay, all right.
We definitely do those as
Okay.
So we start low. So meaning that we can start from either $1 million or 2 and go up.
Right.
That's what we're saying. So there is a range. We're just saying to you that the higher you go, then I'm saying it depends. We may get someone else to assist you on this forward in SME space. But it's normally from at least, if you want $1 million, 2, 3, 10, 100, we can lend it to you.
Right, and also just remember, lending a credit card is a product that allows you to spend and pay later. So you also, if you want to buy your goods, why take a loan? Consider looking at a credit card where you can pay for your goods. You can get a tax credit card. First Global has a tax credit card that gives you cash back. That is to take care of anything having to do with the government taxes, anything to do with government payments. So you can get credit and you can get loans, not necessarily in the form of a demand loan. You can also get it in the form of an overdraft or a credit card, any type of working capital support.
All right, so my 2 last questions. First is, are loans assessed differently? So dependent on the sector that you're in, is there a different way to look at an agricultural loan versus a manufacturing loan versus a distribution loan?
I'll take that one.
Okay.
Right, and I will say yes. Certainly we have, I mentioned, we have the chicken farm loans, we look at agricultural loans, and yes, we do look at those dependent upon the cash flow. They have alignment. So for the chicken farm loans, for example, there is an alignment with either Jamaica broilers and so on. So there is an arrangement between the provider of the chickens and those who buy the chickens, and so therefore the structure of that loan is going to be different. If you're looking at working capital support, so an overdraft, for example, we look at that differently. We look at your cash flow, look at your cash flow to determine what's the maximum in terms of an overdraft that we want to add to that. So yes, there's a difference in how we assess, but critical to all of the assessment is the business capable? Okay. Is the capacity there to fund whichever type of loan it is that we give to you?
All right. Jason?
Yes. All right. So let me just, let me just add another dynamic to that. So different industries present different risks, and we have to manage those risks. So that's another part of the underwriting. In terms of farming, crop farming, there are pests, there's weather. For other industries, there are peak periods and periods of null. So we have to look and see how we have structured the business to mitigate those risks. And if you have not, we will try to put things in place, if you so agree, to mitigate the risk to the institution, and that's how we will lend.
Okay. Anybody else want to touch that? Or
I think we're good.
All right, not a problem. And then the final question, which is the hardest one of them all. Funding for startups. Questions here are, who funds startups? If I don't have any income as yet, can I get a loan? So I have a wonderful plan, and I'm going to execute it because my character is great. I don't have no collateral because I'm going to start the business, but what I have on paper for the business has the capacity. Can I get funding from one of you here?
All right. I think my colleague had mentioned how we look on startup. So if you want to say, Chris, startup in your definition would have been somebody just come out of university, have a great idea and want to start a business, right?
Or they could have been working in an institution and then decide that they want to start them own.
Okay. So for us, in terms of, you know, lending appetite, it's going to start from that person having that business plan. What is the quality of that business plan? Because I can tell you, Chris, oftentimes when we have that conversation and you ask a question about the management team, which if you look on a business plan, that's very critical. And it's always a dynamic question that even the person who present the business plan sometimes can't answer the questions. And I would describe it that it's a comprehensive business plan, quote unquote, but when you go through the business plan, for me, first thing I need to look on the background to understand what is the product and services that they want to offer to the market, right? Secondly, the management structure, and we spoke about governance, eh? Thirdly, you look on the cash flow, right? In looking at the cash flow, you want to understand and appreciate, based on the great idea, is that these cash flows are realistic. When you look on the cash flow projections, you're not seeing realistic assumption to satisfy or to confirm or get closer to those numbers that they would have projected, right? So the question I always ask, spend some time with the client, looking at the business plan to say, all right, you have a deficiency in presenting collateral, you have a concern in don't have in terms of the first dollar to buy equipment to start the business. But the question or the dialogue that we need to have as financial institution is that, for me, startup to us is really a case-by-case basis. Because you can have an idea which is a game changer for the country. And it needs that sort of conversation for you to say, hey, don't we can overlook certain stuff and see how we can strengthen with our different partners, with DBJs here, or we can look on other bodies, like get information, because when you lend a client or lend a business, it's really having that information to make that prudent and sound decision. So what I'm saying to persons is that when you start a new business, sometimes information is not out there in the public domain. Right? So for us, we're not saying we shun or don't look on startup, but it has to be a case-by-case basis.
Yes, so Chris, I think I just wanted us to piggyback on Michael. I totally agree. We have to look at it on a case-by-case basis. Research has shown, though, that more than 80% of businesses fail within the first 2 years of operation, right? So when you look at that as a financial institution, we have to ensure that if we're going to be helping you or providing financial assistance, you have to have a sound business plan or a sound business. And oftentimes, once you have a proper business plan and you go through it, you'll know if the business makes sense or it doesn't, based on the idea that you have. Because it can be an excellent idea, but when you finish doing the financials and stuff, you're like, okay, but this is not making any sense or financial sense, right? So if you don't have a proper business plan, that is the first thing that is going to be, I would say, that big deterrent for anybody who is starting up a business. And that's why I'll say, come to the BIGEE. We can get you the voucher. And that week, the technical voucher where you can get assistance if you don't have a proper business plan to get a proper one. And
that's on hold.
Huh? Sorry.
That's on hold.
No, it's pulled now, but I'm saying generally that is what is offered. So before it's pulled, we'll know when it's going to come back. But generally, that's why we use that voucher to kind of help. If you're a startup and you're not clear, you don't have a proper business plan, we have that facility to help, but it's on pause right now, right? But we have other agencies that you can also, they work, so, right. So in other words, what I'm saying is that we have different organizations that can help you as an SME to write a business plan if you do not have one. That's what I would say the first thing, right? That is very, very critical. Again, in order for us to determine if we're going to lend you, we're going to look on you, the individual, and depending on what and how you are, we spoke about character earlier. If your character, if we now can look in our database and see that you have been a customer with us for XYZ amount of years, you have this sort of facility on the personal side, and you have been a very good customer, those things will be taken into consideration in looking at how we can provide some sort of assistance for you. If you do not have very good history, credit history, then that's going to be a problem. Because again, if you are not showing that you are good character by not defaulting on your loan, then obviously we would have a challenge get funding from, and it not just from us. I think it's across every financial institution here, because we now have the credit bureau, which is now we can pull your report and we can see if you had a loan with XYZ institution or even with somebody that you default, we can see that. So the first thing we're going to say, if you're going to have your big startup, ensure that you, the person who is doing the business, you have sound character with financial institutions across the board, because again, we can look at it on an individual basis based on your own personal behavior. We can decide to provide some assistance, but it's surely to credit card or something, but you have to make sure that you have demonstrated that you are somebody who have a solid business plan and also you are of sound character.
All right. Nikisha, sorry, before I get to this, Nikisha, on funding startups?
Yes, I just wanted to add, I think if we were to get back to the question the person asked, which is, if I have a good idea, can I get a loan? So we spoke about business plans and cash flow projections. Usually when you sit with a startup and they give you what they plan, it's always pretty and hairy-fairy sometimes. And what you find is a loan is not necessarily the best thing during that time, because now you're projecting cash flow, which you don't necessarily realize. How do you now afford a facility where you're demanded to pay monthly? Then you run into bad debt. How do you fund that? So the best type of funding for startups would be equity injections, grants, venture capital programs, which you do have. We spoke to that. So if you're really looking at the idea part, but startups span up to 5 years in operation, which I spoke to earlier. So we have, I know all of us have funded businesses over 2 years, over 3 years. But in your initial onset, it's not necessarily the best option for you to have a loan until you are actually realizing revenues.
Excellent point.
That's very true, Chris and everyone else here. For multiple reasons as well. I think Nikisha covered the majority of it, but a lot of small businesses have very limited cash flow on a daily basis. When COVID happened, I think there was a study that says the average small business has about 2 days of cash flow. After 2 days, you're in considerable amounts of problems. Now, a lot of times equity financing and venture capital financing is referred to as patient money. When you take debt financing, it's not particularly patient. It comes with a monthly repayment, whether it be interest or whatever the case may be. And that is just a function of how those facilities are generally set up. It's just how they work. That's realistically how they operate. There can be a moratorium under certain circumstances, but it will never be as long as equity financing. And from a cash flow standpoint, you might need to buy enough time to get the business off the ground, get it functional, because even the best laid plans can often go awry. So none of us plan for COVID, none of us plan for a lot of the things that happen to us personally, professionally, and so on. So if it is a situation where you can allow the business to grow and have a more robust cash flow, and then there may be options where you can convert equity into debt. Right. If it is a situation where you took venture capital or some equity financing of some other form, you can stipulate in that agreement or in that application to say, well, at 5 years down this line, I would love the option to convert this to a debt financing so I can repay investment with interest or whatever is agreed upon, so I can resume full control of my business that you would have helped me to start.
Excellent.
So those are more palatable options that small businesses can look at as it relates to financing.
Thank you very much.
Yes,
Suzette,
and
just
I think
finally, and then
yes,
I'll
I think
close.
he said most of what I wanted to say. And I would say to any startup, try it. Try it first. So this idea that you have in your head, try it and try it very small. Try it within the capacity that you have to see if this, what you think of, that it actually is going to work. So I would say try it first and see how it works, maybe for about 2 years, and then let's just start, because by then you would have had a bank account and some bank statements and some cash flows that we can look at. So start.
Excellent, excellent.
Just to add on that, I was thinking about the same thing. Scaling is very important. We would much rather you approach us and say, hey, give me $1 million, let me start out. 6 months later, as the business grows, say, okay, I need another $1 million, and we grow with you. But most times you see these big, elaborate plans, and it's asking you a lot to invest without any proof of performance. Right. So don't be afraid to start. Start small and grow.
Yes.
Excellent, excellent. All right, well, I really want to thank all the colleagues that we have up here. I think it was a very good conversation. I really hope that the SMEs, we have business service providers, BDOs who are online as well, really just trying to understand how they can better guide their clients in financing options. Yesterday I was just going through preparation for this, and I thought we should have this as a continuous series. This is really, I think, part one, because we focus primarily on debt. And a lot of what has come out of that is the need for us to discuss the other forms of financing. So for our startups, as was mentioned here, I would echo the same sentiment. The first place we're trying to get money from shouldn't be a bank. Because if you borrow the money and the thing don't work out, then that's how you get into bad debt, and then you're in this downward kind of very difficult spiral to get out of, right? Paul, Mr. Chin, when he spoke, he made mention of friends and family, equity, friends and family, equity, etc. Those are the options that you should probably try first, your own savings. And as was mentioned here, start, right? Just start and see if you can, if it's a product you sell 3 instead of the 10 or instead of the 20, and you take your time with this bootstrapping, juggling, however you want to put it, and you try and be disciplined about it and grow. And then you may get to a point now that you can say you have been running this thing through. Correct. It's just additional money you need now to make this 5 times, 10 times, 20 times bigger, right? So just, I guess, a plug from DBJ. We have a number of grant programs for startups, small businesses, medium-sized businesses. Primarily, they're centered around those who are doing innovation. So you're doing something new that has the potential to scale much faster, right? We have a number of other products that are related to equity. So grant is an option. Equity will be another financing option. I would say let us have that conversation. Maybe what we should do with our next webinar is get into those options for businesses. And, at the same time, as was mentioned, one of the first things, whether you're using your own money, you borrow it, equity grant, open a bank account and run it through the bank, right? Because eventually you're going to want the financial institutions as a partner to help you with some form of transaction in the future. So I will close with that. Again, thank you very much, all. Thank you for everybody who has joined in, asked questions, participated, and we look forward to the next one. I think we're going to do one in October, right, P? So yeah, thank you very much. Have a lovely rest of the day.
but I feel like